Hello, welcome to this week's edition of Coinscrum's Meet the Founder series. I'm thrilled to welcome Tushar Aggarwal, who's founder and CEO at Persistence. Welcome, Tushar. Thanks for joining us.
Thank you, Paul, for having me.
So, Persistence, you pitch it as a protocol for powering institutional decentralized finance. Obviously, DeFi's been a bit of a thing this year. Amazing amount of innovation going on, but it's very hard to sort of filter through the noise. So it'd be great to just hear about your background a little bit and how you got into the industry. We always like to hear how people first heard about Bitcoin or blockchain in general.
Yeah. Absolutely. So I got into the industry through mostly I'd liquidated a couple of investments, a couple of real estate investments that I did with my parents, and had a little bit of cash to play around with, and was looking to do angel investments on the traditional venture side, and was based in Singapore at the time. And instead of, so I was sort of mentoring a couple of startups, working as a management consultant to the financial services industry at that point. And, came across crypto, opened up an account. Crypto was pretty hot, relatively speaking, in Singapore at that time. And, started as a, retail investor, and kind of through 2017, invested in multiple projects, as did a lot of other people, and my portfolio did well enough for me to quit my management consulting job, and I wanted to research the space full time, and wanted access to interesting people and influential people in the industry. So my journey actually began hosting a podcast called Decrypt Asia, where I would interview different kinds of stakeholders. So people running exchanges, entrepreneurs, fund managers, and regulators, all kinds of stakeholders that are relevant for the industry. I built a bit of a personal brand, built a bit of a network, started writing extensively for Tech in Asia, which is the equivalent of TechCrunch in Southeast Asia and South Asia. That led to an interesting job opportunity at Lunex Ventures, which is the crypto arm of a traditional VC fund called Golden Gate Ventures. So Golden Gate Ventures built out kind of the Southeast Asian startup ecosystem. One of the equity investments that they had made is a company called Omise, which ended up doing the OMG token sale, which Golden Gate could not take part in because the fund mandate didn't allow them to invest in OMG. And so that was kind of the genesis of Lunex. I was involved from the very beginning in terms of kind of fund incorporation, setting the mission vision of the fund, getting the website up, opening a bank account, working with lawyers, tax advisors, fund administrators, Monetary Authority of Singapore as the local regulator, to launch Southeast Asia's first regulated crypto VC fund. And as I mentioned, the VC arm of the crypto arm of a traditional VC, and we managed to raise capital. So I was involved in fundraising, managed to raise capital from some decently large institutional investors. And back in 2018, that was a big deal. And so we had one publicly listed Japanese company. We had the VC arm of a sovereign wealth fund, a few family offices in Singapore, and some family offices in Western Europe that were LPs into the fund. And did 7 equity deals, managed a liquid portfolio of about 8 to 12 tokens. Over a period of time, I met a bunch of founders, and over a period of time, I wanted to move over to being an operator versus a capital allocator, and kind of move over to the dark side. So I'd spent about a decade in Singapore, but I originally came from India. Singapore is a great, absolutely fantastic place to build a business, but in terms of availability of talent, India had better prospects. Also, India has the 3rd largest number of unicorns today, after the US and China, in the traditional startup space. But there was not much that had happened in the crypto space in India. So I used to keep flying down for multiple hackathons, events, and over a period, and a bunch of people that I met during that time are now part of the Persistence team. And over a period of time, I had been in touch with one family office that was in the commodity trading space. and that's how Comdex came about, which is one of the applications in the persistence ecosystem, which I'm sure we'll kind of dig into as we go along. But yeah, essentially, in 2019, I kind of made the full-time transition from the fund to being a full-time founder, and kind of shuttle between India, Singapore, and a little bit the Bay Area.
Mm-hmm. Great story and great journey. So which side of the fence do you prefer, or is it too early to say?
I think definitely, given how early the industry is, I think there's definitely more potential for impact as a founder. Mm-hmm. But yeah, I have 100% of my assets in crypto. And so, definitely have exposure as an investor. But yeah, I think, I think working, again, I think the skill sets that are required of being an operator are just so different, but it's more about, building the team, managing egos, egos with your co-founders, and, caring, essentially looking after your employees, and, you're doing operations and finance and, compliance and fundraising and BD and managing the token aspect, managing the product aspect. So I think it's a lot more dynamic as a founder. Yeah, I mean, I think this side is definitely a lot more challenging as well, in a very different way. I think investing has its own challenges, but it's been and especially given the circumstances this year, I mean, it's been an absolutely fantastic journey. Knock on wood.
Sure, excellent. So obviously, probably a lot less sleep than in the previous day job, but it's very exciting to take the first steps on these journeys. So so this has brought us to persistence. I guess the easiest thing would be for you to explain in a nutshell what persistence is.
Yeah, absolutely. And so I think you touched upon it in kind of a one-liner, which is, the protocol powering institutional, decentralized finance or institutional open finance. We're kind of overall, and making some, slight changes to our branding as well. So over a period of time, you'll see this. And so, essentially, we don't want to kind of exclusively focus on, just exclusively the institutional folks, but I think, and this is happening in traditional finance as well, where, I've been speaking to a lot of private bankers in Singapore, and, they're like, retail has outperformed institutions this year, even in the traditional stock market this year. Institutions are having to play catch up. And so essentially how we want to kind of position ourselves is a protocol that powers new age financial products. And so the first asset class that we're going after, which is the one that we have publicly communicated as well, is trade finance as an asset class. And so essentially what persistence allows is, essentially the usage of real world assets as collateral to be able to borrow stable coins. But like I said, over a period of time, not only do we want to be focused on, some of the real world assets, which are represented using non-fungible tokens, but we want to be able to, focus on some interesting, digital assets or, crypto assets themselves, which can be used as collateral, which are thus far not used as collateral in order to facilitate, borrowing of stable coins, one of them being staking derivatives, and we can kind of dig into that as we go along. But high level speaking, for phase one, so we view persistence as an ecosystem of, financial products, ecosystem of new age financial products. But to begin with, we're focused on the fixed income markets. And so, trade finance in that sense, produces about, 6 to 8% on an annualized basis, but in a very scalable and sustainable manner. And then staking derivatives is, essentially entirely a new product, which helps to unlock the liquidity of some of the staked assets, especially as, proof of stake and delegated proof of stake chains kind of, become more prevalent.
Yeah, absolutely. I mean, obviously we've seen the launch of the ETH2 beacon chain this week. And the concept of, yield-bearing instruments within, from natively crypto assets is going to be a very interesting one to watch in the future. But as you say, your objective is also to bringing other real world or tokenized assets from traditional asset classes. Maybe, I guess, security tokens are starting to emerge finally now, with some of the regulatory barriers having been overcome by some of the startups in that space. What are the challenges around that? Because obviously we've got one hand, we've got the technology, and if we look at the whole DeFi movement in general, there's some fascinating technology there, but many looking over the fence from an institutional space would definitely say it's way too early for them. Too many, issues and challenges to be overcome right now. But I guess this is a prime example of how people have identified, or people such as yourselves have identified what those problems are and what you need to do to address them. So could you maybe just talk a little bit about the technology stack that you've decided to use, because there's many options out there, and there's many coming through, and kind of, where you draw the line between what needs to run as pure technology on a completely open, decentralized network, and then where you need to have potentially custom applications which are built specifically to meet things like regulatory demands, whether it's KYC or AML or simple things like that.
Yeah. So I think you captured a lot of points in that question. And so I want to sort of go about answering them in a systematic manner, and so made some notes. But yeah, I think taking a step back, if we talk about the overall technology stack, so we're a Tendermint-based project, and hence part of the kind of wider Cosmos ecosystem. Why Cosmos, why Tendermint? So we kind of started from a top-down approach, which means we started from what the actual problem is and what the actual use case is. And so we were going after, like I mentioned, was in touch with the family office that was in the commodity trading space, and they had highlighted certain issues in terms of the number of stakeholders involved, how fragmented the information is, how long it takes to settle transactions. So transactions settle on a T+2 or T+3 basis via the Swift ecosystem. Traders having trouble getting access to financing. So the large institutions don't have trouble getting access to financing, but the SMEs do, the SME traders, and hence they go to smaller trade finance funds. We tried building, and so essentially, like I said, we started on a top-down approach. So started with the application, which is Comdex, and tried to build that on Ethereum, tried to build that on Waves, which is the Russian platform, or the team is Russian. And over a period of time, wanted to go with the application chain model that Tendermint provides. And you captured some of the points very well in terms of regulatory compliance. So one of the reasons for going with an application specific chain was because you can customize these chains to suit the security of the chain that you need. So the number of validators that you need to be validating the chain. You can at some level customize for privacy, and even in the absence of kind of actual zero knowledge proofs, you can have implementations of privacy in a way which are which might at some level even be enforced through off-chain legal agreements in some cases, through MOUs and things like that with the validators. Yeah, so essentially we were sort of early betters on the POS ecosystem, on the delegated proof of stake ecosystem. At the time that we started building, there was literally just two options in terms of proof of stake. It was Tezos or Cosmos, and in terms of the flexibility that Tendermint provides, and I guess in terms of providing interoperability with other blockchains natively, we made the decision to go ahead with with Tendermint. So if we talk about our overall technology stack, we use Tendermint for consensus. We've built our own SDK, so the persistence SDK, which models essentially, which has a bunch of modules that cover the end-to-end journey for exchanges and marketplaces. So all the way from trader onboarding to asset tokenization, asset exchange, and then trade financing, trader reputation. So it covers the end-to-end journey for, and again, the modules are generalizable. So whether you want to trade carbon credits or solar credits or commodities or art pieces, essentially the end-to-end flow of the trade essentially remains the same. You can have different user interfaces, different applications can use this SDK. And so there are certain applications that we are building in-house, and there are certain applications that third-party developers within our network that are building. And so from that perspective, Comdex is the first application that is built using the Persistence SDK. Comdex is an end-to-end commodity trading and trade financing solution. Comdex is, traded about $41 million worth of physical commodities thus far, commodities such as wheat, copper, soybean, barley. Second app, so Comdex in general is a completely institutional focused application. So Comdex focuses on SME traders and SME trade finance organizations. With the massive boom of the stablecoin market cap this year, instead of exclusively focusing on institutions, what we've realized is that there's a lot of liquidity to be tapped from the crypto markets, specifically the stablecoin markets. And so what we're doing is now sort of building a crypto native application where to the retail traders, we can offer trade finance as an asset class, which is an asset class that they typically don't have access to. And on the other side, you're allowing commodity traders to borrow from stablecoin holders. And so, commodity traders fundamentally have never had access to that capital. They've typically relied on trade finance funds, which are, the LPs of the trade finance funds are typically, hedge funds or pension funds or, sovereign wealth funds. And so essentially, if we take a step back, essentially what Persistence is trying to do is facilitate more efficient, allocation of capital around the world. And, especially in a zero interest or negative interest environment, it becomes even more interesting where, trade finance as an asset class produces about 6 to 7% in a highly insured manner. And in a highly scalable manner. So as the stablecoin market cap grows, our hypothesis is that the returns on stablecoins are going to start mirroring that of the real world, which is essentially zero or negative. And as like high profile stablecoin projects like Facebook Libra come, stablecoin market cap crosses the $100 billion mark, say sometime next year or next year, people are going to have a very tough time deploying these stablecoins into different financial products. But because the size of the commodity trading market, it's a $17 trillion market with 80% of trades being financed in some sort of way, deploying $100 million, $1 billion is, not very difficult and without diluting the returns. So from that perspective, that's kind of the use case. And those are the two kind of initial applications that we're focused on, which are more focused on the kind of the real world asset side of things that we're doing. Some of the crypto native stuff that you still haven't talked about. But going back to your question of, from a regulatory perspective. So because Comdex is an institutional focused application and has institutional clients, everything that happens on the Comdex side is 100% regulated. 100% compliant. Comdex has its own, technology team, its own, BD team, its own legal team, and so they ensure that, everything that it's a, Singapore-based company. Everything that happens in Comdex is, completely legal. Where there is a bit of a sort of, gray area, and this is a gray area for the entire DeFi space, not just for Persistence, is the lack of KYC AML for some of the DeFi applications. And so far, I think, there's about $14 billion worth of assets locked in DeFi applications. I think from a regulator perspective, I think the number is still not big enough for them to care. And so I think they're kind of letting things be and see what happens. But and so we're sort of in the same category as well, where on the DeFi side, on the crypto native side, we're kind of operating like how most other applications are operating, which is essentially through wallets, and so that can be like a bit of a gray area, I suppose. Sure.
I mean, I guess that's kind of a good example, I guess, and be interesting to hear your thoughts on. Obviously, for you as a company, you have a need perhaps to develop some of these solutions, maybe around KYC just being one example. But ultimately, these things will work better when they're not proprietary. There's open standards for these things to, enable better interoperability. So where do you sit? I mean, I guess there's certain things that you need to develop now, otherwise you can't move forward. But in terms of the platform as a whole, is the vision that ultimately people will be able to come along and build their own modules and own applications on top of your base layer, basically.
Yeah, absolutely. And so, and again, we've kind of shied away from being called a base layer because, again, we didn't develop, Tendermint. We just rely on Tendermint as the consensus engine. So we're kind of at the middleware layer and the application layer, but not at the absolute base layer.
Yeah.
But again, what we've done is, again, if you look at Ethereum, right? Ethereum is just a very general purpose blockchain. Tendermint is just, a general purpose, consensus engine. And Cosmos itself does not have too much functionality. I think they're shooting for the interoperability functionality of having, assets move around on different chains and data move around on different chains. But beyond that, you can't really do much, with Cosmos. And so what we've done with our SDK is essentially, like you pointed out, create more functionality, which allows people to, build applications on top. And what we've done is we've kind of vertically integrated ourselves by moving up the value chain and creating our own applications as well. So not only do we rely at the SDK level, which has a bunch of these modules, but kind of move up the value chain and create our own applications and capture the end user as well. And so from that perspective, yes, absolutely. Although we foresee the persistence team to be driving most of the development of the SDK, we welcome, third-party developers to come in and kind of innovate at the SDK level, but most definitely at the application level. And so, that's where our approach is a little bit of, somewhat hybrid approach as well, where I think especially in the blockchain industry, in the crypto industry, owing to the open source nature of things, there was this thought process of like build and they will come, kind of thought process. Whereas what we do is we're huge believers in, of course, the tech itself, but having aggressive BD strategies in terms of actively reaching out to organizations, to institutions, to individuals that we think can drive adoption. And so the initial set of entrepreneurs who are using the Persistence SDK to spin up new applications are all from within our network. So where we have sort of done offline BD or off-chain BD to drive those use cases, and we don't talk about some of those use cases too much publicly because they're a little bit more out there, and a little bit, I think, will still take a couple of years for them to the regulatory landscape will have to evolve a little bit for those use cases to sort of flourish. So they're more focused on real estate and more focused on and tokenization of real estate, and focused on fund management in the context of venture capital and private equity. So we don't talk about those too much, although they're being built and sort of being built for the future. Trade finance is super simple because, first of all, everything is denominated in US dollars because it's cross-border commodity trading. In general, trade finance as an asset class is very lightly regulated. So there are not too many regulations around just trade finance itself. And the cycles are really short. So 30 to 90 day, cycles for lending, which works pretty well with the crypto native folks who are usually a little impatient. And so, and obviously owing to the fact that we had the strongest network through this family office in the commodity trading space, our go-to market was through, commodity trading and trade finance.
Yeah. So I guess in the long run, I mean, it makes a lot of sense that you could be cautious about using this term in kind of the public blockchain industry, but it kind of makes sense to start off and build what might be perceived as a bit of a walled garden, but with the longer term vision that those walls will generally come down over time as these other kind of longer term bigger issues get resolved, and people can get more comfortable, and things can become more compliant in the very open public kind of realm of DeFi.
Yeah, Yeah, and so, again, I think the sort of the initial, folks within the industry were, the cypherpunks and the hardcore ideologists. And again, I think it's a natural kind of evolution of an industry where, you have, people who are like I consider myself to be a little bit of a suit, right? And so you have, you sort of start coexisting with the technologists, but you have the suits coming in, and I think it's happening more and more, and that's how an industry moves ahead as well.
Yeah.
And that's why our approach, like I said, is the ideological approach is just you just build, everything is open source, so someone will come and build on top. But we just believe in going extremely aggressive out into the world to drive use cases and to find use cases and to find teams that want to build and help them throughout the process, because we have gone through the process of creating a brand, of fundraising, of doing marketing, of community building. And so now we're helping multiple other teams that want to fundraise. We'll tap into our networks to help them to raise capital, for them to build their brand, so and for them to drive use cases. And so it's sort of and I think like some of the newer chains, right? So you look at Solana, for example. I think that's a good example where that team, I think, does extremely good BD and reaches out very aggressively. I think Polkadot is kind of doing something similar as well, where they are their BD team is extremely active, which is at some level at a little bit of an odds with how Cosmos operates, which is a lot more ideological in nature. So I think it's sort of the founder's DNA that gets ingrained into the protocol itself. And on that spectrum, I think we're extremely BD oriented, while obviously pushing out things from a tech perspective.
Sure. And how have you found that then, in terms of like that kind of process for engagement with your current users, potential users? How motivated are they to test out new solutions? And how far do they even want to go with their understanding of the kind of core technology? Because if they've got Polkadot, guys from Polkadot knocking on their door, and then guys from Solana knocking on their door, and then you may be talking to them about the benefits and the merits of Cosmos, I can imagine a few eyes glazing over, because there's so much choice and nuance between them.
Yeah. I mean, again, and that's a bit of a tricky one also, right? I mean, that's why we're sort of, our longer term goal is to be as agnostic as possible, right? And because we think, all chains will interoperate, all chains that sort of win or like exist in the future will interoperate with other chains. And so truly speaking, if you're going after the end use cases, you should just ideally gravitate towards wherever there's the highest amount of liquidity, which is Ethereum at the moment. But Ethereum has its own limitations, which is why you sort of want to interoperate with Ethereum, but still maybe keep some things on, the tenement side or the substrate side if you're building on Polkadot, or Solana if you're building on Solana. So again, this whole one chain to rule them all, and base layers trying to go aggressively after entrepreneurs. I think over a period of time, ideally all applications just sort of coexist on sort of multiple chains, with assets moving from chain to chain. But in general, I'm pretty bullish on the application chain model that both Polkadot and Cosmos espouse, where you don't have sort of one chain to rule them all, but you have a bunch of application specific chains that are created in a way that suits the specific requirements of that particular use case or that particular application.
Yeah, no, absolutely. It will be essential. So we need to wrap up shortly because our time has flown by. Just to finish up, look a little bit into the future. Say over the next 2 to 3 years, firstly, what are the biggest challenges that the industry as a whole really needs to focus on? What would be the biggest win if everyone could work together to overcome? You know, say in 2 years, given the trajectory that we suddenly find ourselves on, you know, how far from mass adoption, especially at least touching on public blockchains for more enterprise use cases, do you think we are?
Yeah, I think, you know, to answer your first question, in terms of challenges, I think, like, and again, you know, as the cliche goes, you know, every new technology starts looking out like a toy, and then kind of over a period of time evolves and you know, solves some problems. I think the crypto world, I mean, you know, despite the kind of DeFi craze, you know, and if you look at some of the most popular DeFi applications as well, they are a lot of fun to play with. They're great to speculate. But truly, I don't think they really solve any problem for, I think, anyone in the world. It's a great money making tool, which a big part of finance is. So I'm not, you know, downplaying that. You know, I benefit from it, but essentially, it doesn't solve a pain point for someone. So I think, you know, I think that's happening, you know, fairly quickly in terms of just, you know, crypto as the rails for just moving capital around the world quickly. I think Aave is doing a phenomenal job, for example, in terms of, you know, figuring that out, where their go-to-market was to get adoption more focused on just the crypto assets itself. But now they're looking at, you know, onboarding new kinds of assets that you can use as collateral to facilitate loans. And so I think, to summarize, I think finding those pain points for the world and then solving those problems, I think that is one of the biggest challenge. And that ties into the second question that you asked, right? When you solve a problem for someone is when you get adoption, because you're solving a pain point, and then over a period of time, business models emerge. Yeah, so I think, I mean, again, I think from a 2-3 year perspective, could we get to mass adoption? I think it really depends on how you define mass. I don't think we're going to, I think, like, you know, I think CZ mentioned this thing that, you know, in 2015, like he felt that, you know, like 2015 was, if you think right now that 2015 was too early, I think 2020 is too early as well. Like, you know, I think people in crypto, just because of the demographic of, you know, being mostly like young males, have this insane amount of FOMO, that the world is ending tomorrow. I need to make money today. But I think if you take a step back, I think even in 2025 will be super early. And so essentially, yeah, that's kind of the thought process that, you know, we like to operate with that persistence. I like to operate it, you know, sort of personally, where you try to zoom out and not get caught up in the kind of, you know, day-to-day FOMO of what this industry brings, but try to, you know, see what pain points one can solve for anyone in the world, and as a you know, byproduct, generate revenues.
Yeah, absolutely. Focus on all the small problems, and then the big ones will probably solve themselves as they all merge together. So, well, it's going to be fascinating to watch. And look, we really appreciate you taking the time to join us and tell us all about the project. It does sound really interesting. So we'll be keeping a close eye on how things pan out, and wish you guys and the team every success.
Thank you so much, Paul. Thank you for having me.
Absolute pleasure.
You were extremely patient.
Absolutely. Very enjoyable. Cheers.